Good morning friends, today it's 29th of May 2025 and the technical outlook for Nifty and Bank Nifty for intraday and short-term time frame is as follows. Nifty future has been within a consolidation zone since 12th of May and yesterday was the 13th session when it has ended within a range. It was down marginally and ended the session at 24,762 odd levels. Today being the monthly expiry for the Nifty futures, we believe that the index can continue to be within a range with slightly positive outlook looking the global market scenario. As per the price study, on the immediate basis, Nifty futures 24,600 remains important support, while on the higher end 25,000 and 25,200 remains important resistance which need to be taken off in order to witness some kind of profit taking, short covering and fresh buying interest. Till then the index can be within a range. We have been advising to be light and hedged with the leverage long position since this is an ongoing consolidation after a sharp up move which we have seen in last few months from the lows of almost 22,200 which was made in March. The index has bounced back towards the highs of 25,200 before entering into the consolidation phase. So 25,200, the index has attempted toward those levels and has been facing stiff resistance around those levels, so that need to be taken off. Till then the bias remains range to slightly negative, and between that range 24,800 Nifty spot can act as a silver line between bulls and bears for next few trading sessions. So trading below 24,800, 850 Nifty spot slightly be hedged and light with the leverage positions. Let the index give a major breakout and breakdown of this consolidation zone that will further define the trend of this index in a short-term time frame. As per the monthly OI data for Nifty, the maximum call build-up is at around 25,500 and 25,000 strike price, while the maximum put build-up remains at 24,000, which is a broad range of 1,000 odd points for the index. And as mentioned, within this range 24,800, 850 spot can be looked as a silver line between bulls and bears. For the day traders today, in Nifty intraday 24,650 and 24,580 can be looked as a buy levels, keeping a stop of 50 odd points, while 24,970 and 25,050 can be looked as selling levels for intraday players, keeping a stop of 50 odd points. Bank Nifty, which ended last session at 55,446 and ended the session marginally in red, down minus 0.05%. The index continues to be within a range and it has formed a kind of double top at around 56,000 mark in last couple of sessions, while on the lower end 54,800 and 54,500, that's important intraday supports. As per the price study, the index is within a range. Consolidation is going on and we have seen selective buying interest within this pack. PSU banks like SBI, Canara Bank, Bank of Baroda, PNB are witnessing buying interest at the lows, while in the private banks ICICI and SDFC remains range to up as of now as per the price study. So there is no as such reversal signals of the index in the counters, but yes, it is facing a stiff hurdle at around 56,000, 56,500 since last few weeks now, and that level need to be taken off before one can expect some kind of short covering and fresh buying interest. Till then it continues to be within a range with a slightly downside outlook. On the lower end, the positional support remains at around 54,000 and 53,500 zone initially. Their dips toward those levels can attract fresh buying interest. As a whole, today being the monthly expiry session, we can expect some kind of positive momentum looking the broader global market scenario. But for that, the first 45 minutes will be important, holding over and above 55,600 for Bank Nifty futures and 29,400 for Nifty futures will be important to see. If these levels are held, we can expect some kind of pullback, further attempts in the second half of the session. Overall, be light and hedged with the positions. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.